the end of this year, next year, we should get to about billion wallets. The point being is this scaling is going to continue, and I think it's going to keep accelerating. So what does it mean for all of us? This is a $3 trillion industry today. It is going to 100 trillion by, let's say, 2034.
Embracing the crypto revolution. Discover visionary insights from Raoul Pal, CEO and co-founder of Real Vision Group, on the transformative potential of cryptocurrencies and the importance of prudent investment strategies. Raoul Pal, a renowned macro investor, envisions such a future, predicting that the crypto market could soar to a $100 trillion valuation by 2034. Pal forecasts that the number of crypto wallets will reach 1 billion by next year, signaling mass adoption and integration into our daily lives.
100 trillion from 3 trillion. Maybe I'm wrong by 50%, and it's a $50 trillion industry. If it's 100 trillion, we're only 3% of the journey. So all of you who say, oh, should I be buying Bitcoin so high, or Solana, or Ethereum? 3%. It is going to 100 trillion or 50 trillion. It'll be the largest accumulation of wealth in the shortest period of time the world has ever seen. It is a mass redistribution of wealth. In front of us lies the largest wealth generating opportunity of all time. And we're only 3%. If you just think of a little scale, and we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us.
Navigating the crypto landscape. Pal's investment wisdom. In this burgeoning ecosystem, Pal offers timeless advice to both new and seasoned investors. Exercise caution with leverage. Avoid using borrowed funds to amplify your crypto investments, as this can lead to significant losses, especially in volatile markets. Maintain a long-term perspective, focusing on the enduring value of your assets rather than succumbing to short-term market fluctuations. Resist the urge of FOMO. The fear of missing out can drive impulsive decisions.
Your game is to hold on to your goddamn tokens from 3%, $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns. As of an asset class that produces la-la land returns anyway, you don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years, a down 70 or down 80% market, you will feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them, and your wealth will be compounding. Another thing is, once you're in this space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1,000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You know, you're holding in Bitcoin, Ethereum, and Solana has only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the mega trend. Rule number one, don't lose control of your tokens. And that brings you into, okay, so how do I asset allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, stupid, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. Hold those with 80 or 90% of your portfolio and do nothing. You just don't need to do anything. Then there is that inner degen inside of you, that part that wants to trade other stuff, that wants to trade in memes. Well, do that with the 10% of your portfolio. I pretty much guarantee, because I've tried this a couple of cycles now, that bag of investments is usually worth about zero at the end of it. You've had a lot of fun, but you've lost all of the money in it. But you'll be more than offset by your major allocation. So it's things like this that are really, really important. Is don't use leverage, because leverage means when the price goes against you, you lose your tokens. Don't buy stupid shit. Don't go too far out the risk curve with too much, because if that token doesn't work, you've lost control of your money and your ability to participate in the big trade. Don't FOMO into stuff because you don't understand it either. You don't know, you don't have an edge, don't pretend you do just because your mate told you. You know, the reality is that every time a friend of mine tells me to buy some meme coin, and I'm in a weak moment, maybe I'm tired, maybe I'm hungover, and I buy it, it usually goes down 80% almost immediately.
The promise of Web3 and blockchain technology. The evolution presents a paradigm shift to a more decentralized internet where blockchain technology ensures transparency, security, and user empowerment. This infrastructure not only facilitates financial transactions, but also verifies identities, distinguishing between human users and automated entities.
The other thing is, how else do you lose your token? A lot of people look for yield. And I don't have a problem per se with yield. I've never been a yield guy. I'm a macro guy. I'm a price guy. But yield, if you're putting your tokens in control of somebody else to generate returns and you don't know where the returns come from, it probably works for a period of time, and then at some point it may well blow up. And then you've broken rule number one. You've lost control of your tokens. So you need to be really careful with leverage. So we're going through this profound period of change where first we're going to get this super acceleration of productivity, of asset prices, something we can really participate in, beyond which it becomes a very dark world I call the economic singularity, which I don't think of as a pessimist. I don't know what this means for us and how we're going to figure it out. So I kind of figure out we've got 5 or 6 years to unfuck our future, to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible. You'd rather go into this with your lifestyle covered, your future secure, and then we can figure out this complicated future. What I don't want to be doing is figuring it out while launching a new business in the early 2030s and everything has changed. So, you know, it's kind of, we can see it ahead, like the steel mills in Sheffield in the UK or Pittsburgh in the US. We can see that these things are going to be closed down. We can see there's immense opportunity before it happens. So that is the ride we're on. And this is one of the key things for crypto that I try and tell everybody. It's like, I don't care whether you believe in, you know, the libertarian angles. I don't care whether you believe that the technology is not for you. What you need to believe in is your future, and this is the only opportunity you're going to get to do that in this period of time. People need to understand what is going on here. This is not just Bitcoin and a pristine collateral layer. It's not a bunch of cryptocurrencies that people are trading. What this is, this blockchain technology, is the security truth layer to the internet. Without it, the internet cannot progress with AI. AI, we're bringing in something we've never had before, non-human activity. Non-human activity and human activity will need to prove what is what and who is who. But also, as we go increasingly digital, every day is more digital than tomorrow. Tomorrow is always more digital than today. Everything from every contract that we do, all of this stuff, and humans live by a system of contracts, whether it's tickets, agreements, everything. Even me turning up on the Zoom call today is a contract. All of these contracts, some have value, some don't. The ones with value are generally done via paper and some sort of ledger system of which somebody notarizes it, if you think about a property. But what we're moving towards is a way that we can do this digitally in a way that is trusted because there's no central party in the way. And so this scales everything from ticketing to value to artwork to money to everything. This blockchain also proves who is a human, who isn't. So we can prove these things. It's a proof layer that is distributed amongst thousands or millions of people that confirm what is the truth, as opposed to one trusted party. So this scales as AI scales. It has to. Without it, we couldn't have AI, or we would entirely break society, money, and everything else. The trend rate adoption of wallets keeps increasing every day as new people start to use this. Now, as I said before, I've compared new wallets to IP addresses. I rebased them in the past back to 5 million as a starting point for the internet. It was at 92, 93, and I did 5 million wallets for crypto. Now, we've all got multiple IP addresses, we have multiple wallets, so it's pretty like-for-like comparison. You extrapolate that out, by the end of this year, next year, we should get to about billion wallets. Okay, that's a lot. And now how many users? Well, that's a matter, Jamie, you're more qualified than I am to figure out what the exact number of users are. But the point being is this scaling is going to continue. And I think it's going to keep accelerating because now we're bringing these other economic actors, the AI agents in. A way of thinking about this for people who are not quite sure, because blockchain and crypto have lots of narratives and people latch onto different ones. The one that I found resonates with people who are not in it on the money side, but just want to understand the technology. This is the new version of the internet. It's called Web3. Whether that name changes over time or it sticks, it's irrelevant. But the point being, it's just the new version of the internet that we need for the present times. Now, the internet was the greatest technological boom of any of our lifetimes and one of the greatest inventions of all of humanity. It was a way of coordinating humanity in the digital age. It created pretty much the digital age. Now, none of us could participate in that. It was a public service utility good that made a bunch of VCs and a bunch of companies very rich. But us lot, it didn't really do anything for us. Our lives got better in many ways and worse in other ways, and it got more convenient, but we didn't participate in the wealth. Think of all the wealth that got generated in Silicon Valley, where I am today. I mean, there is staggering wealth here. And most of us didn't participate. We became their product. Now here, the magic is, how blockchains work is they have an economic incentive system, which is a token. And that economic incentive system incentivizes you to use a network. And the more you use the network, the more of these tokens you get, and also the more they go up in value. So you've got this economic incentives. This is what this technology does. It is incredibly powerful economic incentive machine to bootstrap the next version of the internet in record time. That next version of the internet gives us almost infinite use cases, whether it's to do with money, the entire global financial architecture, whether it's to do with value, whether it's to do with ownership, whether it's to do with identity, or whether it's to do with AI and economic systems that are yet to emerge. That's what it's here for. That's the infrastructure that is being set up.
Such advancements are set to redefine various sectors, from finance to social media, fostering an environment where individuals have greater control over their digital interactions.